Welcome to the Daily Market Recap. Today is Monday, July 6, 2026. What a gorgeous green day on Wall Street. The bulls clearly got the memo that the tech slump was over, sending the market sharply higher. The S&P 500 jumped 0.72%, pulling back within just 1% of its all-time record high. Meanwhile, the tech-heavy Nasdaq led the party with a massive 1.12% surge, and the Dow Jones added 155 points to notch a historic record close. The main driver? Pure, unadulterated artificial intelligence optimism. Investors stepped right back in to buy the dip, shrugging off recent overcapacity worries ahead of a highly anticipated second quarter earnings season. Taking a look across the sectors, the information technology sector was the star of the show, soaring 1.3%. Leading that charge was the semiconductor index, bouncing back 2.2% after a tough couple of days. However, it wasn't a universal green sweep. Surprisingly, declining stocks actually outnumbered rising ones within the S&P 500 by a 1.3 to 1 ratio. This means while tech megacaps dragged the major indices upward, smaller value sectors experienced quiet profit-taking as capital rotated heavily back into growth. Even with indices flirting with records, the Fear and Greed Index tells a much more cautious story, sitting at 44, which puts us firmly in fear territory. This fascinating divergence shows that while big tech is pumping the major averages, the average investor is still holding their breath waiting for macroeconomic confirmation. Our top news story today is a massive win for the semiconductor space. Broadcom jumped 3.7% after announcing a long-term agreement with Apple to extend their partnership all the way through 2031. Under this multi-year deal, Broadcom will supply a wide array of custom cutting-edge silicon products to Apple. This injected an absolute jolt of adrenaline into chip stocks, giving investors concrete proof that tech relationships remain locked in for the next decade. Next up, a massive shift in retail investing policy took center stage. The New York Stock Exchange and Nasdaq joined President Trump in the Oval Office for a historic joint bell-ringing ceremony to mark the launch of Trump accounts. Partnering with Robinhood and BNY Mellon, this new initiative aims to extend stock ownership to every eligible American child, providing a massive generational head start in the financial markets. Rounding out our top three, the AI infrastructure land grab is heating up. TeraWulf shares climbed 4.9% following the bombshell announcement that AI giant Anthropic has agreed to a massive 20-year deal to utilize TeraWulf's data center in Kentucky. This transaction is expected to bring in a staggering $19 billion in revenue, highlighting how former crypto miners are aggressively pivoting directly into high-octane AI infrastructure. All right, let's look under the hood at the individual stock movers that absolutely crushed it today and the ones that left a painful mark on investors' portfolios. Leading the charge on the winning side, our top gainers are AMD, Rivian, Iron, Elcid Advanced Micro Devices, ticker AMD, exploded 6.6% as broader chip optimism surged ahead of earnings season. Electric vehicle makers Rivian, and Lucid Elcid both saw explosive short squeeze style action as clean energy found sudden momentum. Meanwhile, clean energy infrastructure and Bitcoin miner Iris Energy, ticker IRON, caught a powerful bid alongside the broader AI data center computing hype, proving that any stock tied to power infrastructure is a golden ticket right now. On the flip side, the wall of shame features Sols, RGC, AAP, RKLB. Evidentiary pressures hit Solar Play Sols and medical microcap Regal RGC, which both tumbled heavily on dilutive financing worries. Automotive retail giant Advance Auto Parts, AAP, slipped as consumer spending metrics signal a tougher retail environment. Rocket Lab USA, RKLB, also faced a pullback as traders locked in profits following its recent massive contract rally. It's a stark reminder that speculative plays can get deeply punished if cash flows aren't perfect. Let's map out the charts, starting with the S&P 500 proxy SPY, which sits near $741 on the upside. Your immediate line in the sand is the all-time high resistance around $749. If the bulls can clear that, we enter clean price discovery. On the downside, key support sits at $735, followed by a heavy demand zone at $728. For the tech-heavy Nasdaq tracker, QQQ, the price action is incredibly tight, closing near $714. The bulls are eyeing initial resistance at $722, with the critical 52-week high of $748 looming further out. For the bears to take control, they need to break key support at $708 with a must-hold line down at $695. Small caps are still fighting the good fight, with the Russell 2000 proxy, IWM, resting right at $298.97. Resistance remains incredibly stiff at the psychological $300 level. If IWM can punch through 300, it opens up a massive runway to 310 on the downside. Support is firmly established at $292. Switching over to digital assets, Bitcoin had a volatile ride. BTC caught a macro lift from recent cooler labor data, temporarily surging past $63,600 before consolidating near $63,140. Analysts note this looks like a relief rally as institutional spot ETFs snapped a 10-day outflow streak. Key resistance is locked at $64,500, while $59,000 remains the ultimate line of defense. Ethereum is quietly grinding its way forward, holding steady near the $1,775 level. ETH has been building a solid accumulation base here, heavily supported by positive inflows into the spot Ethereum ETFs. To flip macro bullish, ETH needs to break and clear the $1,900 psychological resistance, while holding $1,550 as major structural support. As for the rest of the altcoin market, it was a mixed bag. While major layer ones like Solana and XRP slipped about 1.2% in a minor cooling off phase, crypto-adjacent equities saw substantial bids. The overall altcoin market cap is holding its breath, waiting for Bitcoin to firmly establish its footing above 64,000 before kicking off a broader market rotation. As we look ahead to tomorrow, the market sentiment is cautiously optimistic, but undeniably tech-dependent. The big event to watch comes on Wednesday with the release of the Fed's latest FOMC policy meeting minutes. Traders will be combing through every sentence looking for clues on how policymakers balance sticky inflation risks against a softening labor market. Until then, expect volatile, fast-moving, range-bound trading. If you enjoyed this daily market breakdown, please remember to like and subscribe to the channel for more daily updates. Hit that notification bell. Let me know your thoughts in the comments below, and I'll see you right back here tomorrow.